Hi everyone, and welcome to Symax Fintech's weekly market insights. As usual, broken down into 4 parts. Before we get into that, just our disclaimer. So trading does involve potential risk of loss of capital and is not suitable for everyone, but of course I hope it is for you. Now, many companies will provide leverage. Just be aware you can lose substantially more than that initial investment. Views, opinions, everything contained in this and everything we do is just purely for educational purposes. We're just trying to help you guys out. We're not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, consider the risks involved, your financial situation, definitely your level of experience and risk appetite. And of course, only risk capital you're prepared, but more importantly, you can afford to lose. And then, of course, if you've got any doubts whatsoever, seek independent financial advice before risking your capital. So let's take a look at the highlights of last week. Plenty of data out, lots going on last week. So Dallas Fed was better than expected at negative 17.2. Housing data was pretty much in line. And then when we move on to the employment data, JOLTS was lower than expected, coming at 8.8 million. It wasn't that long ago, it was at 10. ADP was lower than expected as well at 177,000. And then looking at PCE data, that came in line at 0.2 month on month, which was 4.2% year on year. GDP came in at 2.1%. Now, initial jobless claims were lower than expected at 228,000. Then Chicago PMI, that came in at 48.7, but that was expected 44.1. Now, the NFP number itself came in a little bit higher than expected at 187,000. Average earnings came in at 0.2%, and that was month on month, which was 4.3% year on year. And then the weekly hours worked were slightly higher than forecast at 34.4, but the unemployment rate jumped from 3.5 to 3.8. Then PMI manufacturing came in at 47.9, and also we saw construction spending increase 0.7. Then ISM manufacturing was 47.6. Prices paid 48.4. Now they was expected only at 43.9. So a few surprises with the data there, and of course the markets reacted accordingly. Moving on to the EU, we saw consumer confidence come in line at negative 16. Sentiment and confidence data that came out, economic was 93.3, industrial confidence was negative 10.3, service sentiment came in at 3.9, and business climate was negative 0.33. Now CPI, so the harmonized there, came in at 0.3 month on month, which was 5.3% year on year. The unemployment was unchanged at 6.4%. Now the ECB minutes were hawkish, and PMI manufacturing still slumping really at 43.5. Anything below 50 is contraction. So for me personally, I think it's always got to go below about 47 for impact. My thoughts, but it's there, isn't it? So and then moving on from that to Germany. So we saw consumer confidence came out negative 25.5. CPI is 0.3 month on month, which was 6.1% year on year. And the harmonised month on month was 0.4% and 6.4% year on year. Retail sales were lower than expected. They came in at negative 0.8% month on month, which gave a negative 2.2% year on year. Unemployment was 5.7%. And PMI 39.1. So obviously that was a bit low. In the UK, shop prices 6.9%. Inflation's still here. I'm in the UK. Consumer credit was lower than expected. It came in at 1.19 billion. Net lending to individuals, however, was higher. It came in at 1.4 billion, and PMI was better than expected. Still not great though. Came in at 43. Moving on to China, PMI manufacturing was better than expected, came in at 49.7, so very close to expansion there. Non-manufacturing was 51, and cakes in manufacturing was also 51, and that again was better than expected. In Switzerland, ZEW was lower than expected, came in at negative 38.6, was expected negative 31.3. Retail sales were negative on the year by 2.2%, and CPI came in at 1.6% year on year. Moving on to Australia. So retail sales better than expected, 0.5%, and then building permits month on month, they were much lower than expected. They were down negative 8.1%. They was only expected down just below 1%, negative 1%, 0.8. So that was a bit of a surprise there. CPI came in at 4.9% year on year, which was lower than expected, but PMI came in higher than expected at 49.6. New Zealand, building permits again, just following what was happening in Australia there, they were negative 5.2%. When they were expected at negative 0.2%. That's month on month as well. In Japan, unemployment rate 2.7%. That's increased. And consumer confidence was lower at 36.2. Industrial production was lower at negative 2% month on month. Which was negative 2.5% year on year. Retail sales came in at 5.5%, and retail trade came in at 6.8%. So a bit of a mixture there, and of course it was a busy week on the markets. So let's move on. Just a reminder of our services. So apart from the YouTubes we provide, there's a free daily newsletter that includes global headlines, my views, and global news. The full articles. And of course, as a subscription, there's fresh daily chart levels and pivot points. There's a mixture of workshops, courses, and masterclasses to help you from whatever level you're starting. If you're new, then we do introductions to trading to help you to find out if it could be for you or not. It's not for everybody, but come along, try it for the day and see if it works for you. And then there's plenty of other ones that they're just really to help people fill in any gaps or to improve what they already know. And of course that will help you to accelerate your trading. Our 1 week courses, got a mixture of those, and one of those actually includes a free trading challenge. And within that week, if you've got that in a trader, I will find it. And then we have our comprehensive masterclass and flexi. One's accredited, the other one's a flexi masterclass. These are for people that have decided that trading is definitely for them. And then we go through providing you with all the fundamental knowledge and trading tools you're going to need to navigate any market in any conditions, and of course any asset class. And that's important, you must find the right asset class for you, otherwise you're missing out. Right, so trader mentoring, if you're already trading but you want to get to that next level, I can help you there. I've helped so many people with that. Some say that I changed their lives in a good way, of course. Consulting, we sort of discuss and help people with hedging for their FX and commodity exposure, and there we just create very flexible but robust hedging strategies for them. And of course that's been massively important over the last 2 or 3 years with everything that's been going on. And we are a leading provider of trader education content to individuals, exchanges and brokers. As I mentioned earlier, we've got these funded trading accounts through one of our partners that are available. Of course, you've got to pass the challenge. 2 of our courses include that for free. Now, there was one that was sort of banned or had their assets frozen last week. Don't worry about that unless you are American or Canadian. That's the problem. America and Canada don't allow CFD trading. But of course we've got other challenges that can lead to funded trading accounts without CFDs anyway. That's why we have 4 different ones. If you want any more information, then just reach out to us at info@symaxfintech.com, and my email is chris.tubby@symax-int.com. Okay, so let's move on to part 2.